Hi everyone, welcome to Value Investing. It is no secret that Warren Buffett is one of the most successful investors of all time. His net worth has been growing throughout the years. Along with his money machine company Berkshire Hathaway that has grown twice as much since 2015. But how did he do all these? I've been studying him for a while now, and put together a list that covers 5 main principles of Warren Buffett. Number 1. Invest in yourself. In an interview, Warren quoted, "The best investment is to invest in yourself." This doesn't mean buying designer clothes or jewelry. What Warren meant is investing knowledge into ourselves. The best way to do this is to simply read a book. In fact, Warren Buffett spent more than 6 hours reading every day. There are tons of great books about investing, but arguably the best is The Intelligent Investor by Benjamin Graham, or if you're just starting out, 7 Secrets of Investing Like Warren Buffett by Mary Buffett is the way to go. The great thing about investing in yourself is that no one will ever be able to take it away from you. Prioritize investing. In the book, 7 Secrets of Investing Like Warren Buffett by Mary Buffett, she mentioned how important it is to prioritize investing over other expenses. Most people would only invest their leftover money from their expenses. But what is important is to have a reversed mindset of what most people think. So if you just receive a paycheck and pay all your bills, don't go straight to the pub or get your hands on brand new designer clothes. Instead, prioritize investing and invest on growing assets like stocks or an index fund for a safer option. It may be easier said than done, but it is never too late to start a good habit of investing. You can always start small by cutting unnecessary expenses bit by bit. The key here is consistency. Also, set a target amount of money you have to invest every month, like $200 to $500, and prioritize it over your expenses. That way you can be consistent on investing. If you were to invest money into an index fund with an average return of 10% per year, your initial investment would double in only 10 years. Pretty impressive. 3. Be humble and down to earth. Other than his 6 years old eating habits, Warren Buffett is known for his humble and down to earth character. Unlike his billionaire who owns many multi-million mansions all over the world, for most of his life Warren has lived in a modest house that is currently only valued $600,000. In fact, he is still using a $20 flip phone as his day-to-day device. He only buys things when he sees value in it, and intends it as an investment. Take his beach house in California as an example. He initially bought the house in 1971 for $150 and now it is valued for a whopping $11.4 million. He also mentioned it as one of the best investments he has ever made. 4. Start investing and not trading. In an interview, Warren was asked a question on mistakes in investing in the stock market. He replied by saying that most people think by having liquid assets, it is very intriguing to sell them prematurely. In fact, Warren Buffett has held stocks for over 30 years. Now, most people will have to face this in their journey of investing. So, my advice is to sell the stock when it is highly overbought or on the ex-dividend date of the stock, as its price will pretty likely fall after. Also, the good thing is you still get the dividend of the stock even after selling it. After that you can buy it again when the stock is not overbought. Invest on something you master. If you are wondering why Warren Buffett had only bought big tech stocks like Apple recently. And as you know, most of his large investments are in banks and financial companies. This is because he didn't understand how tech companies work. He has mentioned this in a lot of interviews with the media. Before buying a stock you have to be able to evaluate and predict the value of the company in the future. This is why understanding the company is essential. There are many aspects of a company which we have to evaluate, but this will be a topic for another video. But if you are a beginner, I suggest you invest in index funds or a government bond, as they are way safer than the stock market. 6. Be patient. Investing is something that needs patience. When you see a stock that is currently skyrocketing, would you buy it straight away? Or wait until the right moment? If you ask Warren Buffett, the answer is obvious. In an interview, Warren states that he could spend waiting years for a stock to reach its fair price. To conclude, he may seem the expert in his field, but remember that some things just need time. You may not be successful on the first try, but bear in mind that there is no such thing as easy and quick money. Successful people have to endure many losses and failure, so one thing you have to do is to try again. Thanks for watching this video. I hope you find this helpful. I created this channel just to genuinely help people, so consider subscribing and hitting the like button. See you in the next video.